Welcome to Cardone Debate, hosted by Dana.
Welcome to Cardone Debates. It is March 3rd. We have some really amazing guests. I'm super pumped for today. We're going to be talking about Bitcoin, MSTR. We have we have a bear. He's going to hold his own. Let's see what he can do. And before we get started, we are partnered with Arch Lending. You guys will want to check that out. If you're sitting on Bitcoin, Ethereum, or Solana, and you want liquidity without dumping your stack, then Arch Lending can make it easy. You get USD or USDC in minutes. Your collateral stays in qualified custody, and they never rehypothecate your assets. As your bags move up, you can scale your credit line instantly or pull collateral back when market runs. And if you need help, you get real humans, no 24/7 AI nonsense, no bots. Arch Lending is simple tiers, public pricing, market leading rates at every size. So check them out at archlending.com/debates. Obviously, this company is great with risk assessment. How else could they have dealt with me so successfully? Remember, you'll want to use code DEBATES, and that will get you 50 basis points off your APR on your crypto-backed loan today. So, Dustin, how's it going? We missed you last week. We all were sad. I don't know if you saw the episode, but we were thinking of just canceling it.
It's funny. I show up. We've got a new awesome intro. We've got like, what show did I just walk into? Like, this is. I like the improvements. I approve.
Oh, that means a lot to me. I mean, I do everything just for your approval.
Yeah, I know everybody does. Like, right, like main character syndrome for sure. But all the charts are kung fu fighting. Chop, 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 chop. Like, this chop has been brutal, man. So I know we got a great lineup today. I'm curious what people are thinking, because, like, seems like every time we've started to build some momentum, we're getting slammed back down. I mean, it feels like a masterclass in market making for leverage traders. I mean, they've got to be just devastated. So I think we're due to leg up, though. But you know how I am. I'm forever bullish and optimistic. I think things are going to turn around fairly quickly, and I expect to head back up, like crash. This is I would rather have a straight crash than this slow, choppy grind stuff. That's just like, you know what I mean? Like, it's okay to go down, just don't bore me. I don't mind if we go down. I'm too crypto for the activity. This has just been boring. It's like, well, we're staying in the same range.
Yeah, well, I think you're in your own kind of lane. You don't feel anything. Like, I don't think you feel anything when the market goes up or down. You're like the same guy every time.
Yeah, listen, you gotta. Having done this for more than a decade, you learn that volatility. What's the saying they use? Volatility is the price of admission. Which is, right, like, that's the price we pay to be able to play in this incredible space. So, you take the good with the bad, you grind through it, you come out on the other side. The people who survive always do best. So it really is just a patience game. And it's funny, my time playing professional poker, almost all of the same things apply, right? Like, it's stack management, it's managing your emotions, it's managing your fear of missing out, and just staying calm. So that's what we do.
Cool. All right, let's bring up the guest. Gary should be coming soon, so we're just waiting on him to arrive. But anyway, let's get started with Jesse. How's it going?
It's going great. Thank you for having me on. My name is Jesse. I am a corporate attorney, so I do a lot of work with companies, both in kind of private markets more now, but in the past, public markets, in capital markets issuances, common stock, preferred stock, debt, and M&A, and kind of a range of corporate transactions. And I think I'm tagged today as the token MSTR bear, but we'll see how bearish I am.
Yeah, you are. I can't hear you too well. You might want to talk closer to your computer, but I don't know. It's weird. You sounded great earlier. So yeah, Jesse's going to be kind of our token bear. Like, we have a really hard time finding bears here. So if you are a bear, please send me a message, because I'd love to bring you on sometimes and debate some of these smart guys. Thanks so much for coming, Jesse. Good luck. Grain, so happy to have you. Thank you for coming. Can you tell us where people can find you online and what you've been up to? Like, I see you all the time. You're on X pieces, sharing your knowledge. Like, tell us about you.
Sure. So the quick 1 minute, and can you hear me?
Yeah, you sound great.
Yeah, make sure. So I had to log back in. So I go by Grain of Salt as Z06, Z07. It's a Corvette thing. I did not think about that part of my X handle when I signed up for it, how hard it would be. But with that said, I've been in the Bitcoin space. It'll be coming up 9 years in May. And I've been in MSTR since a very small position in 2020. And then I did a large position in January of 23 late December January of 23 and late December of 2022. And I had never heard of Michael Saylor before August of 2020, never heard of his company, never heard of him. And so I've been just heads down, and that was the play. So I wanted to move into something that had more volatility.
Cool. Well, thank you for coming. You have some really cool stories. Feel free to share those throughout our debate. I know, a good amount about you, so happy to have you here. And Brian, you're a new guest. We haven't had you here before. Tell us about yourself.
Sure. Yeah, I'm best known in the Bitcoin space for my coverage of Bitcoin treasury companies on X. Relevant to the conversation here, I'm former head of Bitcoin strategy at H100 Group, which is trying to run the Bitcoin treasury playbook in Sweden. Currently, I am an advisor to My Right Capital, which is a Bitcoin-focused hedge fund, and also an advisor to Saturn, which is building a stablecoin backed by digital credit. And as far as strategy, I've been involved since, say, 2021. I had about 90% of my net worth in strategy during the 2022 bear market, which is an interesting time, but that turned out to be an absolutely fantastic hold for me over the next few years. So it's it's a company I'm particularly fond of.
Awesome. Well, thank you. You're clearly on the bull side, right? So that's what side you'll be taking. Although sometimes we really appreciate it when you guys can, play devil's advocate. Dustin does that very well, so I'll probably put you on the bear side, Dustin. We actually once we did a debate about kids and no kids, and Dustin has like a whole shoebox of kids, and he had to debate against them. So this is how we roll here.
I'm also kind of known as being a realist, so I can bring some nuance.
Yeah, cool. Mike, thanks for coming again. Are you playing with any AI bots at the moment?
Yeah, I spend more time there than talking about MSTR these days. A lot of Claude code, just personal stuff, but venturing into some other areas, potentially professionally. So it's an exciting time in AI. Just the possibilities are endless with what you can do. And so, as always, you got to seize opportunity when you get it. So I could firmly say I am not on the bear side here.
Yeah, you're not. Mike's done very well for himself. And whenever he comes on here, he is a big advocate. I don't even know if I could put you on the other side. But, happy to have you here. We are going to do an AI debate here soon as well, and you're invited. So Gary's stuck in traffic. Make sure that you guys follow everyone on this panel. They're they're superstars. So if you're not doing that, you're going to miss out. You might as well just light all your money on fire and just give up while you can. So let's get started. Grant's going to probably be joining soon as well. The Cardones are having some issues with their travel at the moment. Go figure. It's probably genetic. I want to start this off by saying, a a lot of people have been very, very depressed around the treasury companies as a whole. Like, I don't even think this discussion really needs to have an opening. Yeah, like we can say strategy is the narrative is like it's going to the moon, right? Like it's going to be the biggest company in the world. Like that's the one narrative. The other narrative is look, there's just too much risk, just too much that we can't measure, too many outsourced potential problems. So I think it would be really good to start off with probably the bear. You know, if you can make your case on why you're concerned about MSTR, you know, just your points about it. What?
Sure.
Yeah, I'll give you the floor.
Yeah, can you hear me okay, Dana?
Yeah, you sound great now. And remember, guys, reshare the room if you can. We're always trying to bring on amazing guests like this, so like it and reshare it around.
Sure. So a lot of what I've talked about on Twitter has really been with regard to MicroStrategy and Bitcoin treasury companies has been misconceptions around metrics related to Bitcoin treasury companies. And I think there are lots of kind of people that think that transactions are occurring and issuances of common stock are occurring that have kind of greater value to the common holders than they in fact do. But I think I would probably, if we're kind of looking at what is the bearish case, I would say that I think people are looking at MicroStrategy and thinking of the 2022 to 2023 landscape and business structure where MSTR was trading at a steep discount to NAV. They had a market cap around between 1 to 2 billion. And they were able in the bear market when the bull market took off to quickly put on debt and leverage at extremely attractive rates. So at 0% or close to 0%, allowing them to really take advantage of that bull period and also narratively be powerful to common holders. You can sell that easily to common holders. The idea that you have to borrow at 8%, I get to borrow at 0%. This is a much better levered vehicle. And we can increase Bitcoin per share significantly because of the size of the market cap and the size of the company. Today, it's just an entirely different company and an entirely different model. It's something like 40x the market cap that it was there in early 2023. There's almost $1 billion in pref obligations that are payable monthly, quarterly at rates that are higher than most people can get via margin lending. And so that's kind of a narrative problem. But I think the biggest problem of all is really that the scale with which the scale that they're at means that they have to increase their stretch sales by kind of multiples in order to get very low Bitcoin yield. And I'm happy to kind of run through the numbers there, but you can look, people talk a lot about stretch, and I think it's a really cool product, and it's very attractive, I think, for fixed income investors and also attractive for Bitcoiners. You have this new buyer in the market that you wouldn't otherwise have. But when you drill down on the numbers of how much stretch they would need to sell in order to get sort of any significant Bitcoin yield, it's quite a challenge.
Thank you, Jesse. Grain, I want to hear what you have to say in response to this.
Well, so should we go back and forth, or should I just give you my thesis of, you wanted the bearish view, right? People are listening to this and they want to hear that. Is that what Mike was saying? What Jesse was saying was that STRC can it scale to add a meaningful amount of Bitcoin per share? Is that's the crux of what he's saying. What I can tell you is this: in 2020, they had 70,000 Bitcoins. They basically 10x the number of Bitcoins since they started buying. They also added strategy specifically at the end of December 31st of 2023, so January 1st, 2024, they had less than 200,000 Bitcoins. They added 500,000 Bitcoins while the price of Bitcoin continued to go much higher and eventually went over 125,000. So this concept that it's counterintuitive to think, wow, they were able to add more Bitcoin while the price of Bitcoin basically, tripled or quadrupled from whatever price point you want to look at. And so from that kind of almost makes no sense. And so on STRC and the prefs, strategy has been saying that they're going to shoot for about the mid-range is 10% a year. If they 10% per year in 7.2 years, they'll double their Bitcoin holdings. And so what I would say to most people in 7 years, strategy could have 1.5 million to 2 million Bitcoins. And I think that would be surprising to people. Now that's just an average case. So I think that they could surprise to the upside even in this case. So I think STRC doesn't have a problem with acquiring Bitcoin.
The one thing I would say to that, Grain, I think is a lot of that Bitcoin came from high MNAV period where it was over 2. So you kind of have to say, okay, is it going back there again? I don't know. It could be, but it's a challenging investment thesis. And then from IPOs that were very steeply discounted. If you're selling products that have a par value of 100 to investors for $85, you're going to get a lot of demand. And so I think the better metric for demand is really the stretch ATM, which is something like over 7 months. I think they've raised 670 or close to 700 million. And so if you hold sort of the common share, let's just run through the numbers on like a Bitcoin per share idea where you're trying to get 10% yield. If you're trying to get 10% yield, increase Bitcoin per share by 10%, and you're holding Bitcoin price constant. So let's say it isn't going up. They have to sell something like 5 billion in stretch. So it's possible, but that's also kind of 7x what they've sold thus far via the ATM. And that assumes that Bitcoin, it assumes two things. It assumes Bitcoin price doesn't go up. If it goes up 30%, you're looking at a much bigger number. And it also assumes that there's no kind of common sales that have to be sold in order to pay the dividends, which kind of have no positive effect on Bitcoin per share. And so that's not fatal or anything. I don't think it means MicroStrategy crashes. I think it just means that if you're looking at it from a risk reward standpoint, it's not the $1 billion MicroStrategy that could get 0% to $2.5 billion at 0%. And you're going to ride this rocket ship up. That was great, but I don't think it's there anymore. And I think that if Bitcoin needs to move in order for these treasury companies to do well, there are better alternatives.
Okay, so let's separate Bitcoin treasury companies out from strategy. So, and I know that you already know this. So amplification. So the prefs do not increase the shares outstanding in the calculations, correct?
No, well, Stripe does because it's convertible.
Stripe does, right? Because it's okay. So you've got that one. So from that perspective, that lends to the amplification. They're acquiring Bitcoin. It's a shared pool of Bitcoin among MSTR and all the prefs. And so what happens is you have an increasing amount of Bitcoin, but the share counts from the prefs do not increase the denominator, which is the shares. So from that perspective, I don't think that, STRC has only been available since July. And I believe Strike was the first one that went out in January. So it's basically, strategy uses the term seasoning. They've only been out for a year. So, well, some of them less than, half a year. So the hard part is to make a projection with not having a lot of data points. On MSTR, we have 90 transactions over 5 years. That's very easy to model out. So from my perspective, I think, again, going back to what I said before, January 1st of 2024, spot Bitcoin ETFs came out. Everybody said, oh, there's no reason to buy MSTR because I can buy the spot Bitcoin ETF. Much more efficient, low fees. It's not Grayscale Bitcoin Trust, right? No reason to buy it. MSTR went to an all-time high. And in the time frame from then to now, they added on 500,000 Bitcoins. And if you would say to any rational person, oh, it's game over, January 11th of 2024, it's game over for strategy. But then they acquired 500,000 Bitcoins. So what I'm saying going forward is I don't think that people can make a really good projection. I'd like to hear from from Brian and Mike and Dustin. I think that's the way I look at it.
Grain, the interesting thing is, yeah, they added 180,000 Bitcoin in a 6-week period, end of 2024, with MNAV well over 2. So they were flying when Bitcoin was flying in a bull market off the presidential election. But then we saw a decline in overall ATM sales for the common until you got towards 1. And then liquidity picked up because now you have a lot of people interested on both sides. You got the people thinking it should be valued more than 1. You have people thinking it shouldn't be valued more than 1. And so you see liquidity at the low end and at the high end. And so, we talk a lot about like oscillation. You got the Bitcoin cycles of bull bear, but when you're looking at MNAV as just the pure, can they sell common stock and can they continue to sell ATM shares, you get more liquidity at the peak. I mean, this is and not as much in the middle. So I mean, this is pretty standard market stuff as far as I'm concerned. So I don't think it's a concern. We saw liquidity pick up when at the depths. They added $2.25 billion in cash from the common ATM in November. They've added almost $5 billion so far this year, and then we're trading at 130. The lowest sentiment we've probably ever had. Bitcoin down 50%. I mean, the whole idea that there's not going to be liquidity to continue adding Bitcoin just doesn't really hold up a whole lot.
It's liquidity as though is distinct from demand. And people talk about liquidity and volume a lot with regard to stretch and with regard to the common stock. I think we got to separate those out a bit. You can increase the volume of transactions that are occurring in a security, but that doesn't necessarily increase the net demand for that security.
I think there's a couple things to say on both those points. Is that one, I think even among diehard strategy investors, there's a temptation to glorify the days of the convertible bonds, but I don't think people have really realized what the full cost of capital there was. If you model, Bitcoin actually does have a 30% CAGR over the next, say, 10 years, which is, what Saylor's models are based on. If you assume the dividends over that time are paid entirely with share issuance, which I think is most likely what's going to happen, you actually only wind up issuing about half as many shares as you would if you did, say a convertible bond at 50% premium, 0% interest rate. So I think the 0% interest rate they've been getting on those convertible bonds is misleading. That really the value of the Bitcoin bought with preferreds to the common really depends on what the path of Bitcoin is. Ultimately, the share issuance there's going to be some issuance. It's not zero because they're going to sell shares to pay dividends, but it's potentially far less. Think about all those diagrams you've seen where people put the house, and they've got the price in Bitcoin, and it's going to zero over time. Well, the same thing is happening with Strategy's dividend obligations as Bitcoin goes up over time. Assuming it does. And the second point about liquidity and demand, right now I think there are genuine concerns about demand, but really the issue is, can Strategy get credit ratings? Most institutional capital is locked out of these products right now. I think probably it's very heavily retail driven, aside from a large chunk held by Capital Group. A lot of it's retail driven. A lot of it's, you can see in their marketing, it's, get 10% and live your dream in your retirement. It's not, hey, Mr. Credit fund guy, why don't you come buy my preferreds? And part of the reason is that the products aren't rated or they don't have the right ratings that they need to invest in these products. So if you can actually unlock institutional demand, that is potentially where you start, getting the pickup in volume, where you start getting that, if Saylor can actually get, 1% of the $300 trillion bond market that he wants to get, that's where you start getting that from. But it's a process to get there, and that, it's not going to happen overnight. There are hurdles to get through, but I'll go ahead and pause there for a moment.
I mean, I track this daily. They've sold Stretch ATM on 35 total days. So they have 664 million of ATM sales in only 35 days. This is the first month that we've had before the ex-div date that Stretch is consistently trading at 100. It's so early in the growth and maturation of these products. I mean, you look at Stretch, it's a slam dunk a million times over. I mean, and I don't see that demand dropping anytime soon when you have hundreds of billions, trillions of dollars potentially of capital that could flow in there. It's just I don't see where the narrative comes from that they either can't raise capital and continue to grow, or it's going to decrease, because all metrics that I've seen is it's continuing to increase. So I feel like it's just unfounded. When you look at this over, say, the next 3 to 5 years with where we're at, you talk to people and they don't even know what stretch is. They don't understand how it works. That's why we're out here on X every day trying to educate people. But it's so early, and the numbers it's putting up right now is kind of mind blowing.
Yeah, but let me go back to what Brian just said. Okay, there comes a point where there's only so much we can say for education. What strategy would do, what they would post up, and Jesse, you're going to know exactly what I'm going to say here in 2 seconds. When they did the converts, they'd put out the convert, and there'd be a press release. Then there'd be an X post, which is a summary. Then there's, on the investor relations page, there's another summary, and then there's a PDF. And what I can tell you right now is less than 1/100% would click on the PDF and read it, and they would see, oh, strategy raised $1 billion, 0 coupon. And everybody go, oh, strategy borrows money at $0. Going back to what Brian Brookshire was just saying was, oh, if you click on the PDF and read it, you would see that there's a 40% conversion rate at the end of the maturity of the convert. And that 40% would be divided over the 5-year term. And people just don't click on it. So I'm going to be very clear about this, is that if somebody only reads an X post, if then someone only reads the website, if they do not click on the PDF, and we're going to go we're going to go a couple levels deeper, because Brian and Mike were at Strategy World. There's a difference when we talk about stuff. Did you read the PDF manually as a human? Did you cut and paste the PDF into AI and say, compare it against the previous 8K or 10Q and come to that idea? Did you go talk to Saylor in person in Las Vegas? If your answer to those last 4 questions is no, that you didn't do that, can't talk to you. I'll go grab a Diet Coke, because you're not reading the filings that are out there. So Jesse, you're going to look at this from a legal perspective, read the PDF and say, oh, based upon their filing, it says this. Brian's going to look at it and say, the cost of capital is not 0. There's a conversion, which is usually about 30 to 40%. You guys can correct me, because the prefs were different. And so people don't even bother reading that. I wrote a book that was about 50 pages to describe one Excel spreadsheet. Book sold very few copies. Then I recorded a 7-minute video. That was too long, right? So then from there, I wrote a post that summarized it, that you could just look at the table, and the table got almost 5 million impressions that everybody should understand. I inverted Bitcoin per share to shares per Bitcoin. Now, there's no reason why that post should have gotten 5 million views, but people that are in this and follow this, their attention span is pretty much less than 30 seconds. And they don't read those documents. So when we were on this space, we got to determine are we going to have the space towards the person that actually reads the documents? Jesse's a lawyer. Brian and Mike were in Las Vegas with me. We were there for 3 days. There's different levels of people. It's not being elitist. It's just that some people just don't read any of the documentation. And those conversations are, well, now I got to get you up to speed. And they don't want to. So I think that's where we are today.
Well, I think that gets at the narrative point, though, and actually speaks in favor of Stretch in a lot of ways. A lot of people have said, people aren't going to look into this. They're going to see this product that's 11.5% yield, and they have $2.5 billion in cash. This is very attractive. I think in the same way, it kind of goes against some of the common stock where you say, wait, we have all these dividends, we have all these obligations. We're paying 11%. We don't have any operating income, so there's going to be inevitable dilution. So it kind of cuts both ways. But one question I had for you guys on stretch demand, because I think that's kind of the big question, is stretch demand, and how can you tap into greater markets, larger markets, funds. Do you see the buyers of stretch now as retail that kind of are Bitcoiners, or just folks that are looking retail that are interested in this high yield product, and they don't think beyond this kind of and they're happy to get it. If it gets paid, it gets paid. And if it stays around 100, that's great. And kind of the secondary question is sort of how you think that will be impacted as Bitcoin, let's say Bitcoin goes up 40%. Are those people impacted?
Well, yeah, I have a view on that. It was my impression when the first price started coming out, especially when Strike came out, that what people were trying to do, as evidenced by X posts, so take this with a grain of salt, no pun intended. But what people are trying to do is basically use these as short-term savings accounts for when they were not holding their strategy position and rotate in and out of them. And when I saw that happening, and then when I saw the stretch announcement, I thought, okay, this is obviously going to be the most popular one because this is the use case that most people seem to be trying to use it for. So to your point, I like I was saying earlier, I think these products are very heavily retail driven. I think they're very heavily driven by people who are also strategy holders. And the challenge is going to be to go wider than that. Perhaps there's broader success. Even Capital Group, who is the largest institutional holder by far, they're also a large holder of strategy itself. And so the challenge is going to be to go to broader than that, to get the retiree who doesn't know anything about Bitcoin, doesn't want to know anything about Bitcoin, just wants their 10%, and also get that fixed income portfolio manager who just wants the best returns in their portfolio. So there's definitely still work to get to those folks, in my opinion.
Let me chime in here. So the mechanics, how this is the benefit by being at Strategy World. So we had Matt from Barclays who presented on Monday, and he explained basically that they have 4 different desks. They have an equity desk, they have a convert desk, they have a pref desk, and they have a bond desk. And so there's 4 or 5 different investment banks that do the ATMs for strategy. You've got, I believe TD, you got Morgan Stanley, you've got Benchmark, StoneX, and you got Barclays. And they vary based upon each instrument, which one of those does it. The benefit was we had Matt there on Monday, and what he explained was when strategy wants to go raise, pick a number, 250 million, 500 million, $1 billion, they don't go retail and say, oh, I got to go find a $1 billion worth of retail investors that are going to go buy Stretch or MSTR. What happens is Matt explained they go to the desk, whether it's the equity for MSTR or they go to the pref desk, and they say, hey, Saylor wants to float this instrument. What is the institutional appetite for it? And then they go back and they hear from that. Then they buy those shares, and then they could then sell off some portion of those shares later. That's how this works. And so the retail guy it's the tail wagging the dog. The first part about this is the institutional investors. Those are the people that were in Las Vegas for the past 3 days. That's who we got to rub. Mike was there. Brian was there. That's who we got to rub elbows with for 3 days, talking to them. And that's what they presented on stage. And so from that perspective, they go buy these, right? And then they sell off a portion of those that go to retail. Strategy is not selling this directly to retail. Do we want retail demand to be there? Absolutely. But that's just the way that this plays out in the marketplace. And so Saylor has to go to those groups first, and that's why they were there.
What's up,
Mike, is
guys?
that about right?
Apologies.
Didn't we see all these guys talking?
Hey, everyone.
Yeah.
We're just.
Exactly right.
I was just on the phone with
You're on
Gary.
mute. Am I on mute?
What do you got, a picnic?
Gary's at his daughter's
I'm on here.
lacrosse game. Those are some pretty sweet glasses.
I'm at the local lacrosse game, folks. Yeah, chip, choppy, chop. So sorry, guys. I have had so many difficulties connecting, and I don't even know if you guys can you hear me? Okay.
Yeah,
I'm
yeah.
in the middle of a soccer lacrosse game. Anyway, so what are we debating exactly? It sounds like y'all are all in like violent agreement and want to just go hang out with each other and have orgasms all day long. Financial ones, of course.
Relax.
Especially Grain. Grain's got his argy glasses on. He's in the mood.
I'll change colors.
Who else is in the room? Do I know everybody? I can't see everybody on this tiny little phone.
No,
Is Grunt in the room?
Who?
My man Grunt.
Oh,
You know.
Grunt is here. Yeah, your brother.
Grunt. Grunt Cardone, yeah. That was my nickname for him when he was a punk. Now he's just a billionaire punk, and I get to call him Grunt with a capital G.
Oh my God, there's two of them.
So hey, does anybody think MSTR is not a
Oh,
good
you're
investment?
muted.
I said a long time ago.
So Grant's having audio issues. I just had to leave twice and come back in. You guys were working great, and I'm on a wired
How about
connection,
that?
so I don't
How's
know
that?
what the problem seems to be.
Yeah, good. Cool.
No better? No better?
So going to Gary's, going to Gary's point is
Can you hear me?
MSTR
Yeah.
a bad investment or a good investment? I can't give it. You have to do your homework and determine that. Do I think the price? Am I happy with the price action on MSTR stock?
Come on, man.
Absolutely
Do my homework for me.
not. Do the homework. No, I'll give people some really, really good financial advice. Buy low and sell some high, right? Look, when Bitcoin's at 126,000 and MSTR retakes its all-time high, people will be like, when's it going to dip? I don't know. I'll tell you what, don't buy at all-time highs if you want to optimize your entry points. And.
But Grant, I think you're spot on there. That I think that it's right to think of it as a trade because it's a levered Bitcoin exposure position. And I think some people, it's kind of funny because now it's like there's a lot of advice on holding these things for 10 years, but often you don't hold kind of levered, highly volatile positions for 10 years that have very new business plans. So I think you're totally right that the entry price matters a great deal. And I think that right now, maybe it's okay. It's certainly better than 1.5 MNAV or 2 MNAV. I would venture to say, though, if you're trying to get levered Bitcoin exposure, you can largely, there are ways to do this without having to analyze amplification, MNAV, operating expenses, dividend rates, and because these things aren't moving unless Bitcoin moves, so you can instead just go out and take a levered position and buy Bitcoin and avoid all of the sort of uncertainties and variables that you have to think through with regard to MicroStrategy. And personally, I think that's kind of a cleaner position if you're an investor, because with so much uncertainty, you want to limit the number of variables that you have to predict correctly.
Look, I'll chime in here on something. Look, there's nothing wrong with taking a profit. For some reason in the Bitcoin community, taking a profit, people don't like that. And typically because you tend to have to pay taxes. I always move to Puerto Rico, move to Nevada, Florida, whatever, a low tax state and so forth. I get that. If you don't want to leave your state or leave the country or whatever, then there's nothing wrong with taking a profit. Do I think you should optimize, hold something for 1 year to get long-term capital gains? Sure. I think that's basic understanding. But the P word, people should not be afraid of taking a profit, pay taxes, and go live your life. And holding something for 10 years, because in 10 years, everything all of a sudden, now you have bigger gains. You'll be like, I don't want to take a profit now because my cost basis is so low. I hear the same thing all the time with people. Eventually, now people that have a real estate background, like the Cardones, in real estate, there are different things. There's a 1031 exchange in real estate that does not exist in equities. Right. And so for that perspective, if I was a real estate investor, I would be looking to use a 1031 exchange to defer my taxes out longer out there. And there's other things that you could do in real estate. But if that's not available in equities, then you have to, your strategy has to be different.
The better question, Grain, is should people take a capital loss on MSTR and then buy back in 30 days?
My advice to anybody that does that is there's a major difference between January 1st and December 31st. And if somebody does not understand that, then I am, you're talking about the 30-day window, so the wash rule.
Yeah, well, no wash trade.
Right. So this is not tax advice. Taxes are due quarterly in America if you have large gains in a taxable account every quarter, or they're due on April 15th. But if you want to do tax loss harvesting, you have to do it in the previous calendar year, which would have been prior to December 31st, 2025. And if you want to go do it now, the technical term is you're shit out of luck, right? Because you went past that date. And so from that perspective, people learned that lesson in previous cycles the hard way. And I'll give you a good example of what happened in previous cycles with NFTs. They make a whole bunch of money on Bitcoin, runs all the way up on Bitcoin, right? They book a realized gain. Then they take that money and they go buy a bunch of NFTs, right? NFTs go up and then they crash, right? Then in February, they go see their accountant. This is exactly what happened in 2021. And the accountant says, hey, look, you owe 100 grand in taxes. I'm like, what are you talking about? My NFTs are now worthless. They're like, yeah, when you sold your Bitcoin, you triggered $100,000 gain. And now we're in February and your NFTs are worthless. You have to pay your taxes. And they're like, yeah, but my NFTs are worthless. They're like, bro, you should have sold those in December to offset the gain in the previous calendar year. And then you would have owed no taxes. This is like the most basic thing in the world that went up. And so many people got caught on April 15th, 2022. And so if somebody,
but you could,
things that we're talking about right now, MNAV, Bitcoin per share, Bitcoin yield, Bitcoin dollar gain, Bitcoin treasury company. If you don't understand what I just said about taxes, then maybe just buy an ETF. Go ahead, Grant.
Yeah, I was just going to say I agree with you, Grain, on the loss this year. If somebody wanted to take a loss in March, that loss is going to carry forward.
I can't hear Grant, so someone have to translate for me.
Can you guys not hear me?
Yeah, I can hear you. Can you guys not hear him?
Yeah, we can.
I can hear you, Dana.
You can.
You ain't said anything worth listening to yet, son. So crack it.
Well, is this how you treat your guests, dude? I stopped everything I was doing to be part of your show.
I treat my guests really good, but I treat my family like shit anytime I get it on.
Okay. Sounds like my brother's drinking or something.
So Dana, I can't hear anything that Grant's saying, but I can hear Gary and I can hear you.
Yeah. So
weird, really?
they can hear me though, Grain.
Can hear the truth.
So what I was going to say was, even though Grain can't hear it, you can take your loss this year.
I think you put up a quote there from somebody saying I didn't know what I was talking about, and Higbee said that you could tax loss harvest this year. I think what I was trying to get to is that if you're taking a look, if you have to tax loss harvest, you want to tax loss harvest in the year where you make the big gains, not in the following year. So yeah, you could tax loss harvest any year.
It's not. But what he's leaving out is that loss is good forever. So you can take it, even though you can't achieve it for last year. You can still take it this year, make gains this year, offset it this year. For 26, you're going to be fucking paying taxes here in a little bit. So it's going to be called 10 months and 11 months, whatever. Next year, you're going to be paying taxes. So you could offset now, have a new basis, come back in 30 days from now. You're going to take your loss at the end of 26. You're not going to take a gain because hopefully the next portion went up and you've repositioned your investment. Regarding the 1031, for all you guys in real estate, the 1031, while it is, I've done, 13 different 1031s. While they are desirable, they have a lot of drawbacks that most real estate investors don't know about until they get involved in. Most of which is you're selling an asset that had a profit and you're chasing a deal that you could start making sense of only because it's a tax shelter, not because it's a good deal. And you could end up trapping your profits in the next deal out of a shelter rather than out of a good deal. I've seen a lot of guys, like if I'm selling an asset, I want to sell to a 1031. I want to sell to a 1031 because I can take a marginal deal, squeeze it down, sell it to him because he's saving supposedly, 20% of capital gains on a profit from an old deal. If I can get him to chase the IRS, I can probably crush him on my sale price. And then the other piece there is that you're allowed on the 1031, not to make this a real estate conversation, you're allowed on the 1031 to pick 3 assets. That's a terrible idea because second and third is like leftovers. You have 3 assets. You want the first one. You don't want the second and the third one. And if you lose the first one, you're moving down the food chain to better assets. And if I know that you're down to, 90 days to close, dude, I can change all the agreements in the documents on the real estate transaction I'm selling to you, because I know you're in a 1031, particularly if it's a massive, like it's $100 million gain and he's due 20 million in taxes. I could squeeze an extra $2 or $3 or $4 million from that guy easily at close, even though we already have an agreement. And I've seen these things actually happen in real life. But I thought this was about, is the market crashing?
Is it? Is the market crashing? Why don't you tell us, Grant?
Dude, was that the title? Where's the title of this room?
Well, you're the one that helps with the titles. You know exactly what's going to grab the most attention. The thing is we're technically talking about, MSTR strategy. Bitcoin's already kind of crashed, and we're in a bear market right now. I think we all kind of agree with that. But we all think it's going to recover. So.
Yeah, I was on the Iced Coffee podcast. These guys have, I don't know, a couple million subscribers on YouTube.
Yeah, I
and
know.
they're thinking, hey man, it goes down another 40% from here. I'm concerned about what's going on in Iran. If this thing gets out of control with Trump, the job numbers are going to keep deteriorating, and I know he's going to have a bunch of tax refunds hit this year, but that's kind of going to get swept under the carpet if this Iran thing starts to continue to get worse. I mean, oil hits $100 a barrel. The midterms are over for the Republicans. Like, it's not even, he's got to get in and get out of this thing. That's why I don't think this lasts a month. Trump has to get out of this. I don't think he's committed to a regime change. I think he's like, I got to get in, I got to get out, do as much damage as possible. I can come back in 2 years and do it again if I need to. And I'm hoping that's what he does. And then oil settles down, the Strait opens up, business back to normal, and tax refunds hit, and then we're back to expansion. But Bitcoin, while somebody's coming off mic, Bitcoin, I'm surprised how well Bitcoin has done through this little issue that we have going on.
So Grant, what do you think after your show? Do you think that it's going to drop 40%, or what was you guys' conclusion?
Well, I mean, I know that's what they think it could. I don't think it can go there. I don't personally think it goes there. I think 60,000's our bottom, our new bottom. And could it breach there? If it did, I'd buy more. But they asked me, "Hey, look, what what's the long-term case?" I don't really know. I know the technology of money has to be. I don't know that Bitcoin is the ultimate solution for technology of money, but I know the technology of money has to go forward, and it's not going back to gold. We're not trading in gold. Okay, like I don't. It's the baby boomers that believe this mythology. These gold bugs, like, oh, gold backs the dollar. The gold never backed the dollar for me. I took dollars because that's what people paid in. This is not that complicated. You gave me dollars, I took them. If you'd have given me euro, I'd have taken that. If you'd have given me whatever shells, I would have taken shells. Whatever you would have given me. When you're broke, you take whatever whatever they're giving, you take. And so it's not. Economics is not a lot more complicated than whatever's traded in the marketplace. If it was gold back when Jesus was alive, I'd have taken gold or silver or, bottles or mules or whatever the trade was, right? So I was talking to Peter Schiff the other day. He's like, we're going back to gold. I said, bro, it's never going to happen. You're in a gold bug. You're a tiny audience, but that audience has all the money. So when the rotation started happening to gold and silver, it's the old gold bugs that have been scared of war and talking about war and problems and inflation and currency debasement for 50 years. This is not a new conversation. It's been going on. And that old money rotated into that rather than into the new thing.
Grant,
if Bitcoin breaks 100,000 this year, it's going to be, if we get back through these breaches, I think more and more people are going to start adopting this. And I wouldn't be surprised if some of the big players are not figuring out how to squeeze out those that have made a bunch of money.
what do you, I'm curious what you guys think, and Grant in particular, on Bitcoin trading in line lately, last couple of years with the tech stocks. And if you look at, 5-10 year window, Brian, I think you had a post on this, and kind of sort of like a tail risk of Bitcoin, where tech stocks, because of AI development or whatever it may be, just tech stocks see muted growth or even decline, and Bitcoin just hangs around there. Do you think that's a scenario that can play out? And what does that mean for MSTR, I guess, if that were to play out?
Yeah, I guess I'll jump in there since you commented on mine post. Yeah, I think that basically that's right. That people, the common Bitcoin narrative is that Bitcoin is digital gold, and it should be a debasement trade. It should be an inflation hedge, but in practice, it doesn't trade like that. It trades like high beta tech stock. So yeah, if we wind up in a 1970s scenario where stock market is just it's a lost decade, and it's a commodities boom cycle for a decade, I think that's a real tail risk if Bitcoin does continue to trade like a tech stock. We don't know that's how it's going to play out, but it's definitely a scenario that I'm watching.
I'll chime in here. Can you guys hear me to make sure?
Yeah, perfect.
I don't know why I'm having these connection issues. So the weird thing is, not the weird thing. When I heard that we bombed Iran and that we killed the Ayatollah, I'm like, oh God, I don't want to look at the price of Bitcoin. It was whatever. It was really early in the morning for me on the West Coast. And I was thinking the price is going to be in the mid 50s. I just thought it would have dropped, tanked. And by the time I woke up and saw this, it had already bounced off the bottom and was down only $1,000 from the previous 24-hour period. So I was kind of in shock about that. And even today, with the price holding up, given the global instability, I think we're closer. I think we're kind of like in the bottom right now. I'm not saying it can't go lower or it can't go below 60, but I'm in the same camp with Grant. I think that the bad news for the price of Bitcoin is basically over, although that what's going on in Iran can drag out longer. But I think that gets resolved very quickly in Iran.
Yeah, and Grain, by the way,
I'm
Grain,
not an
that
expert yet on the what's going on in the Middle East. I'll have to ask AI and read up for like 7 minutes, and then I'll become an expert.
yeah. Hey, and Grain, that downward movement it had that day was no
Here, Grant.
That downward movement was no different than the previous 5 days, which was shocking to me.
But one thing I think that's really different about Bitcoin now versus where it was at, say, 4 years ago in the waning part of the Bitcoin cycle, is that there's a lot more historical resistance in the price structure underneath where we're at right now. So, Bitcoin in 2022 at 32K, there was nothing but an air gap from there down far lower. But if you look at the charts now, there's a ton of resistance in that 58, 60K range. So I think it's, if Bitcoin does go lower, and, we'll hope it doesn't, I think it's going to hit, a major speed bump trying to bust through that range. So I'm also of the opinion that we're closer to the lows than not right now.
What's the the common saying is when bad news doesn't push price down anymore, what happens? I think we're at the lows.
And the other thing, Mike, on that is that the person
Where's
buying
all the buying
Bitcoin,
coming from, though? There's no buying.
but whoever
Yeah,
is
come from
buying
the
now,
outside, and it's not showing up.
but the people that are buying now are buying at 65,000. They're not buying at 600.
No one heard
This is
that.
yeah, we heard it.
Sailor's buying, I'll say that.
They're
He's the only
completely.
one that's just pounding, keeps just. But where is the rest of the buying? There's more sellers than buyers. We still have to get rid of this 4 million coins that are priced below $1,000, man. That has to get confronted. Until it does, this market's going to be like this for a while, longer than 6 months. Guarantee you that.
Look, I think it's the institutional buyers that will take it from here. I think that Gary's right that there's 4 million coins below $1,000. I don't know if Gary can hear me, but I think that he's correct. But we need the only way this is going to change around is the institutional buyers like Sailor buying. That's where it's going, and the ETFs. And again, going back to STRC or the prefs, going after the bond market, getting a different class of buyers. So I think that's the only thing that can move the market. The retail, I think, is mostly out of this by now. There's no person that's going to, given the average net worth of a person in America, nobody's going to wake up tomorrow morning and go, oh, I think I should go buy, one Bitcoin for $70,000. I think that those days are well over. It's just not happening. If they weren't going to do it at 7,000 or they weren't going to do it at 21,000, they're not doing it at 70,000.
I mean, the only thing to counter that would be the 1-4% portfolio allocation from the banking side on the wealth advisory. That gets the people who technically would be retail or some amount to allocate, whether they want to or not. But yeah, the buyer comes from the $1 trillion credit market. People chasing fixed income. That's where all that where that comes. An untapped market in Bitcoin because of the volatility. It's never existed, but now we have a number of different vehicles to do that. So yeah, it's institutional and a completely different set of buyers now.
What's interesting to me is the people that I talk to are not historical Bitcoin educated, hadn't read the Bitcoin Standard, the white paper. They don't even know who Michael Saylor is. They have no issue with the price right now. They're not going to go out. They're looking for places to get in. They're very curious. Curiosity is actually coming up. This is not the Bitcoin community, by the way. So these are people that don't know that it was at 6,000. They just know that, hey, what is it? Where is it? They don't know that it was at 126, by the way. They don't know about the old Bitcoiners that sold it, that had 1,000 of them at $100. That's what I'm saying. There's a new audience coming into this asset class that no one really knows anything about. I'm one of those people. I'm not going away. I'm building a business around it. And, I'm hopeful that it works. And I'm bringing in audiences. We're raising money today for it. I can tell you right now, we're raising money today actively on a real estate deal. They don't actually know what the real estate deal is, but they know it includes Bitcoin. The moment I tell them what the real estate deal is, I actually have the real estate to show them, the money's going to come in faster. And they like the concept. They love the concept. I got the real estate. It provides me with security, and the Bitcoin gives me a lottery ticket on some upside.
How does that work, Grant? Could you explain the structure there? How does the Bitcoin fit in there?
Yeah, we basically take a piece of the real estate that they understand, the cash flows, and then we stack the iPods or the Bitcoin. We stack some Bitcoin on it, put the two together as an investment, and you're invested in both of them. So this one could fly off. It could fly off and go to zero. We explained that. This could go to zero. We lose the iPods. They're worth zero. But it could go to the freaking moon. Now, I know this is not going to go to the moon. I cannot get the real estate, no matter how good the real estate is. It could be the Plaza in New York. Dude, I can't make it do more. Time is the only thing that makes real estate better. Or worse, by the way. And with real estate, real estate can get sick, but it just doesn't die. And so if I can attach the two together, now I don't have a short-term volatile instrument. I have a stable long-term investment, and this is connected to it. If this went nuclear, I could peel it off, pick up my profits, and still have my asset. If somebody comes along and says, I'll give you 25% more than you paid for it, you paid 200, I'll give you another, 100. We could peel off the real estate and we own our Bitcoin for free. But the investment, the buyer coming in is not a trader. I think that's the difference. The Bitcoin, at least historically to me, is attractive to the degenerate. And right above the degenerate is the trader. And you guys know there's a bunch of levels of traders, most of which are never going to make any money. Some more sophisticated than others. Some that have a career, tiny percentage have a career that was successful. But I mean, the rest of them are just in and out. It's a career, it's a job, and it's tough. and they're going to tell you about their successes. And if they're old enough, they'll tell you about their losses. But so, I'm just tying the two together. I'm going to put a bunch of these together, Jesse, and then and take it public at the appropriate time, because then the Wall Street will value the real estate as something other than real estate, which I need it to, by the way. And I need Wall Street to value the Bitcoin as something different than Bitcoin. This is what Saylor has done. Okay, you're not buying Bitcoin. And on his last interview, by the way, I did an hour and 45 minutes with him, and I heard it again in this last big speech that he did. He's done trying to convince people that volatility is the feature. I think he realizes now after 4 years, yeah, it sounds good, but it ain't a sales pitch. And now he's saying, you know what? No matter how many times I say it, they're not buying it. What the American consumer wants is stability and cash flow. And that's why he's giving them stretch.
Yeah, Grant, I thought the biggest takeaway, which I think took everybody by surprise at Strategy World, was their pivot. Even though it's called Bitcoin for corporations, it was very clear that they're no longer saying buy Bitcoin, put it on the corporate balance sheet. It's stretch.
Yeah, that's right. Because by the way, that didn't benefit him anyway, right?
Yeah.
Except that he needed people to validate his thesis. And I think he's done trying to sell that too. Yeah. Because when I met with him, he was not that excited about my real estate Bitcoin thing. He's like, it's a pussy fund. It's too much real estate. You're going to regret that later. I said, yeah, but Mike, I am a real estate guy. My brand is real estate. Like, I can't wake up tomorrow and be a Bitcoin collector managing a Bitcoin fund. And he agreed with that, right? But he's like, you just need to go heavier on the real estate. And I said, well, I'm just testing it out. It was our very first fund. It was 85% real estate, 15% Bitcoin with about a 4% cash flow. And I think that some of that might have, he loves what I'm doing. And he's seen the people that came into it. I think some of that might have also, I'm not taking credit for this, but somewhere along the way, he's evolved to like, hey, that cash flow thing might be a real deal.
I agree with what you're saying there. I think one thing to add to it that it's also fair to point out is that before his target customer in terms of fundraising has changed. When the strategy was convertible bonds, he was selling volatility. Volatility was the product, but the consumer wasn't, and it wasn't, retail investors. It was hedge funds doing convertible bond arbitrage. And they were essentially buying, they're buying like call options at a 50% discount. So it was a very sweet deal for them. But now it's, people who want fixed income products. That's what the new product is. And so that has a different target customer associated with it. And that just ties right in with what you're saying. When you shift that demographic of who you're selling to, if they want fixed income, then that's what you pitch to them.
Yeah. The other thing is he is talking to an institutional quality investor. For him to really talk, he's very like, it's hard to like, I'm like, Mike, I don't even know what the fuck you're talking about. Like half the time I'm like, I have no clue what you're talking about. I mean, what percentage of the world can define a convertible bond?
I got my entire start on X because people didn't know what they were. He would post
that's why
and say, what does this even mean?
Yeah, you see, that's why people are saying the real estate protects the Bitcoin protects the real estate. You see, the real estate, this is what I was telling Mike. I said 99% of population Earth understands real estate. They either live in it or they pay for it or they work in it. You understand it. I'm not selling people Bitcoin when I show them this vehicle. It has the real estate came with some Bitcoin. Do you want it or not? Like we've had people like, I don't want the Bitcoin. Good. I'll keep it for myself. It's still a 4% dividend. Well, no, fuck. If it's the same return, I'll take the Bitcoin. That's what I'm doing. Okay. Same risk, same problem. The real estate is the vehicle. I just have the Bitcoin sitting in the back seat. And the Bitcoin could move to the engine. It could just be transmission, but it could move all the way to the engine. In fact, it could move outside the car and be a rocket ship. Or maybe not. Maybe it's just luggage the entire time.
Well, great.
I think, Dana, I'm sorry, but I think as people create more vehicles like that, it's going to allow the retail investor that's going to be more longer term focused and not watching their phone every day to start investing in this and having experience with it.
Well, the volatility early with strategy was a thing that, Saylor always talks about things being interesting. That's what drove people into it. It was exciting. You got traders, you had speculators, you had investors, you got a lot more people involved. But yeah, it's not sustainable pitching that long term as people. Yeah, people are really scared of volatility. And I've always been surprised that real estate people haven't grasped onto Bitcoin sooner. I've always wondered that, because it's
Mike, I think the reason that is because the Bitcoin people talk real estate down. The real estate people already agree. The real estate people are a little like gold bugs, but they want cash flow. They're like, I don't want a piece of gold. I want real estate that has a function and provides me with income. And the tax write-offs, by the way. Gold doesn't provide a tax write-off. So when the Bitcoin community starts talking shit, I had a guy 3-4 years ago, me and Gary were doing this in a room, and it was a debate about real estate or Bitcoin. And that's where I really came up with, why not have both? And some guy in the room says, now keep in mind, at that time we had about $5 billion worth of real estate. He comes in and says, you should sell all your real estate, all of it, your entire 40-year accumulation, your career, throw it away and only own Bitcoin. I'm like, you're a retard, bro. Like, who would give up their whole career? And that's the problem with the Bitcoin community. It's all or nothing. And it's what Graham was talking about earlier, taboo on profits. Like
the income piece is what always strikes a nerve. And yeah, the early Bitcoiners were throw everything into it, take the volatility and ride it up. You're going to outperform, income and your standard investment. But the reality is, and why these products exist now and why Stretch is so important, is that it's meeting people in the middle. It's taking Bitcoin, it's taking the income, and it's putting them together. And people can, you can't. I've always said this. I said, you need an insane amount of Bitcoin to be able to pay all your bills and live off it. Unless you bought 10,000 Bitcoin back in 2012 or are, a mega millionaire now, you can't live off your Bitcoin. The math doesn't work. And so you need some form of income. And the funny thing is these people, there's no way they all have as much as they claim they do and be able to pay all their bills living off it. So they're getting income somewhere. And so it's just, it doesn't work for most people when you actually run the math. And so it's a big knock to hardcore Bitcoiners in many ways. And so the real estate makes sense.
Yeah, when you do Stretch though, you're not getting any exposure to the Bitcoin. It's just the 11%, right?
Yeah.
But Grant, that's the fee.
You're part of it. Yeah.
Yeah. So let me give you a quick thing. With Stretch, the fact that it has a par value of $100 and a target range of 99 to 101, you just tell people, look, it's got a par value of $100. With a bond, as the price go down, the yield goes up. I just did a post on this, but the amount you get paid doesn't change. If you buy a bond for $100 and it pays 10%, and the bond goes down to $50 to sell it, what happens is your yield goes to 20%, but the coupon doesn't change. The amount that you get paid does not change at all, because you're basing it, you got 10% at $100. The price drops to $50. So your yield just went to 20%. People are like, oh, now they're going to pay me 20% a year. No, they're not. They're going to continue paying you the 10% based upon the original par value. And people just don't understand that about bonds. So the great feature about STRC was they keep the price fixed. And you're like, oh, the price is fixed. So I don't care whether the price goes up or down of Bitcoin. As long as Stretch maintains 99 to 101, right? I'm always going to get paid. Now it's 11.5%. And that's why this is, because he made it dead simple for people to understand. That's why STRC it's that simple.
Well, I think also to the spirit of the question, like, no, you're not directly participating in the upside of Bitcoin. But the fact that you're getting, 11% instead of, 0.25% in your savings account or 5% on a bond.
Yeah.
The
Of
reason why
course.
you're getting that interest rate is because of the Bitcoin.
Yeah. I want to make up another point. I know somebody that bought a bunch of bought a CD, right? For whatever, 10 grand. and it's a 6-month term, and they have to wait to the end of 6 months to collect their interest. And I was like, if you would have bought STRC, it gets paid out monthly. And the person was like, oh, so I get 11% monthly? No, the annual yield's 11%. You just divide it by 12 and you get every month you get paid. If you want to get out of it, you sell it. Right. And so I think there's a couple of things with STRC. It's the par value at $100. It's the high rate, 11.5%. And the other part, it pays monthly. The other press all pay quarterly.
How much liquidity does he need to ensure distributions? I mean, what is he forced to hold some kind of treasury?
Well, is he forced? No, but he has $2.25 billion in cash right now. So he's got 30 months worth of yield payments. And then if you sell the stock, it's not his responsibility to sell the stock. It's not like a redemption. It just gets sold to somebody else. Right. So that was the big difference. We're March 3rd.
But what if you don't have any buyers at 99?
Well, then that's when the yield goes up, even though he has to continue paying out at 11%. So somebody said, what happens if STRC drops to $50? Well, then the yield becomes 22%. That's the way bonds work. There's going to be buyers. People are going to come in and buy it at $50 because when it goes back to the par value of $100, you are arbitraging that difference. It's the same. It's the discount, and that's why it probably won't drop. And Grant, to you, how many years does STRC have to maintain that range before, it clicks with people? Not whether it's you or somebody else.
But Grant, I would say the common does need to have a premium, at least over like a medium to long term, because if there's perpetually a discount on the common, that becomes problematic from the standpoint of having to pay those preferred dividends. Just because what ends up happening then is they either sell common at a discount to NAV, which isn't great, that just brings down Bitcoin per share, or they sell down assets, whether it's using up cash reserve, which they don't want to do, or selling the Bitcoin. I think there does have to be some. Maybe it becomes an issue where they do share buybacks or something like that. They don't seem to be concerned at this point. They seem to still be issuing common shares. But I think over a longer term, if you have a perpetual discount, it becomes an issue.
I'm going to slightly disagree with that because if you are, let's say you're selling shares at 0.9 MNAV. Let's say MNAV is fixed, 0.9x MNAV forever, but Bitcoin is still compounding. And the value of strategy shares are still tracking the Bitcoin value. You're still going to come out ahead because you've got a compounding asset which you're not selling, you're selling shares. And if buyers step in to keep bringing that share price up to 0.9x MNAV, which it depends somewhat on the reflexivity of the stock, you've still got a compounding asset versus a non-compounding liability, and that's going to win every time.
Yeah, that's a good point, and I would actually say, I think what you'd have to look at is the overall kind of carrying cost of the company. Like, how much does it cost to run this operation? And then you could actually tick that MNAV down further and say, all right, we're selling at 0.8 MNAV, but still overall the appreciation of Bitcoin kind of compensates for that kind of carrying cost that they're paying over the course of the year. So yeah, that's a fair point. I would also say I think there's probably some reflexive things that occur if you start selling common too low, and common shareholders are seeing that. And I would also say, though, that's why I think MicroStrategy, the scale, while it hurts them from the standpoint of it's very difficult to get high Bitcoin yield if you're very big, it helps them from the standpoint of the efficiencies, because it can operate at a much cheaper percentage of their market cap relative to the smaller players.
Well, the funny thing is, you don't even actually need a yield to pay the dividends, because they capture volatility on the upside when MSTR moves. So MSTR goes up 10 on a pop, you're selling $1 billion of common stock. It could drop back down. Essentially, price is flat, and they just sold $1 billion. They can pay the divs for a very long time.
You mean opportunistically, like sell?
Yeah.
It can sit below.
You can sell at a premium.
Sell it. Yeah.
I mean, MNAV would drop perpetually over time from that, but I mean, they could still fund the whole operation. I mean, as of right now, what the break-even ARR is 1.83%. So, because
do you know how that's calculated though, Mike?
Yeah, you're just taking the existing base of Bitcoin, and it just has to increase 1.83% in value for it to cover the 900 million in dividend obligation for the year.
I don't.
So,
I mean,
it assumes you would sell Bitcoin in this case.
Yeah, I understand, but it's like it's a closed loop system, so it doesn't really matter if they're selling Bitcoin or selling cash. It would still be the same percentage overall. The only gripe I have with that is that I think you have to look at the overall. You have to look at these companies not just in terms of what is the pref dividend, but you have to look at it to run this for a year. A lot of them have negative earnings. So what is the cost to run this for a year? And you have to include the dilution that is necessary in order to finance it. It's still low for MicroStrategy. I think there's others that are not low and I wouldn't touch, but MicroStrategy is still low even when you play that out, and it's still not I think it could still do well. It's just a question of kind of probability of how well they do and whether the risk is worth it.
Yeah. I mean,
guys, help me out here. Are Stretch and MicroStrategy in any way related as to how they affect one another?
Not really, not directly, but they're funding the dividend for Stretch by selling MSTR common stock. So that's their funding mechanism, which of course is all.
I thought they had 28 months of money set aside.
They do, but
it's not clear whether they use it.
Yeah, but
that money was also raised by selling shares.
They sold the shares to do that. So let's just use simple math. They have $2.25 billion in cash. Let's assume it's $2 billion, and they're let's assume that the Bitcoin is worth $50 billion, right? So that's 1/25 of their stack that they pay out per year, right? Because 25 times 2 is 50. So 1/25 of that is what they pay out every year. It's a little bit less than $1 billion. So they do have that cash. But what I think they're going to do is they're going to leave that $2.25 billion sitting there, and they'll just do MSTR ATMs to raise cash, which, as Jesse said, will not increase the Bitcoin per share, and they'll just leave that cash buffer sitting there.
Well, what's the fully diluted MNAV at? Is it actually like right at 1?
So if you look at market cap, are you saying market cap?
The fully diluted share, because their MNAV calculation does not use that.
It's 1. If you're looking at kind of market cap of fully diluted versus the Bitcoin value, it's like almost exactly 1.
Yeah, and there's only a 10% difference in the adjusted diluted shares outstanding and the basic shares outstanding. It's not a big difference. As soon as you start talking about share counts, look at the other Bitcoin treasury companies, and they're orders of magnitude higher given the amount of Bitcoin that they have. But I do want to bring up a point here. Is the market crashing? And I will give you a metric that is problematic for Bitcoin treasury companies. Okay, so you wanted something controversial. Prior in like I said, in January of 2024, January 1st, Strategy had less than 200,000 Bitcoins. So now they have 700,000 plus. Given I could do 2 times 3 in my head is 600,000. If they have triple the amount of Bitcoin, right? And the all-time high was 543. There's no reason why the stock should have dropped below 50%, because you have triple the amount of collateral. And I know, Jesse, from that word from a legal perspective is not the way it's used. But if you have triple the amount of goodness per share, why did the stock drop down to a third of its all-time high, 540, or almost literally a quarter of it, right? If you have more Bitcoin per share, we would have thought that would have held up better. And that's a weird part. Like, Grant, if you bought a building and you were able to magically triple the number of doors that were inside the same footprint, right? And then, the market, whatever, something, we attack Iran and real estate prices drop. You would think that having tripled the number of doors would mean that your property would hold up better than when you originally bought it, right? But that's not what's actually happened. And from that perspective, I think that that's a bummer. I don't know any other way to describe that. That's why the price action on MSTR over the past 8 months has been incredibly disappointing.
Yeah, or Grain, does that just speak to there being some market disconnection with the value there?
There is. And so we saw this happen. A couple things happened. Going back through, to be objective on strategy, in July, they put out an MNAV guidance that they then changed 2 weeks later. And then basically STRC got launched right about the same time. And then what happened was we then hit an all-time high October 5th of 126,000. But by then, MSTR stock had continued to trend down. And then we had the problem on October 10th where the Binance freaking Oracle lost its peg. And that started this bigger sell-off that we've been in now. And then with just a string of bad macro news, right? The yen carry trade blew up. I mean, the high frequency, the hedge fund in Hong Kong that blew up. So where we are today is it should have held up higher, right? And it didn't. And so I think that we look at it now, if you have triple the amount of Bitcoin, right, from 200,000 to over 700,000, the price shouldn't have dropped as much. But what I can tell you is this, the price is set by the market. Grant, anybody that knows real estate, you could think your property is great and you put it on the market and you get no offers, right? And then you get an offer 3 months later and it's a low ball. You have a choice. Do you sell it? Do you accept it? Right? And somebody's like, oh, well, the market's wrong. No, they just told you what your property is worth at that point. Then you hold the property for another 3 years and then you get a premium on it. So it's, the market sets the price.
And that's how it works too, dude. Like, the other thing that I think might have hurt Mike was that he was so convincing about the treasury companies that he convinced a bunch of less educated, less marketing savvy, and less sales communication skill oriented entrepreneurs to jump into the space that created a lot of collateral skepticism about the space.
Yeah, but Grant, I'm going to give you a better example of what happened. If you buy a property in Texas, in Miami, one in Austin, one in Miami, and God forbid, one in California, those are all different marketplaces. They have different multiples. They work differently based upon the tax bases, the renters, and so forth. With Bitcoin treasury companies, their gain or loss every quarter is the same for all of them. They're balance sheet driven. If Bitcoin goes up 10% for one company, it's 10% for all companies. If it goes down by 10%, it's the same. And so what happened was, and I've talked about this before, if you have the same amount of shares of strategy and 1/20th of the Bitcoin, or you have more shares than strategy, then you do not have an efficient capital structure. And I could tell you right now, after I was in Las Vegas for 3 days talking to a lot of these investment bankers, and while they're very smart guys, they really didn't think that through. And so what happened was Saylor, because he's been the CEO of a publicly traded company for 25 years ago, and then became executive chairman, he has a lot of experience in capital markets. The other guys that came in earlier did not realize that these are balance sheet driven and not income statement. Pretty much everything else in the stock market is income statement driven. And that's why they all have different, if you're going to compare Amazon versus Nvidia, they're two different addressable markets, two different cash flows, right? Amazon's got a zillion employees. It owns AWS, which probably makes 80% of their profits. Those are versus Nvidia. Nvidia is a chip company, and it has probably 1/10 the number of employees, right? And so when you compare them, their income statements are fundamentally different. In Bitcoin treasury companies, the income part is all the same for them. It's whether or not Bitcoin goes up or down. And so that was one of the big mistakes that was made with these other companies, and Saylor made it look easy. Grant, I'm going to be upfront. Grant, you make real estate look easy. You do. You're very successful at it. You've been in it.
Yeah, because I don't tell you about the toilets, the tenants, and the termites. But see, I would say to you that, like, look, Wall Street threw fucking shitloads of money at those guys that Saylor didn't get hit with either. Also, Saylor had $75 million of cash when he got started. These guys had zero. He had some customers. He had payables. He had accounts receivables. He had employees. He had already managed cash flow before. Some of these guys, come on, like, some of these guys couldn't get I wouldn't want them teaching my kids basic math. much less leading a company. To then drop out the marketing skills, the communication skills, like the get excited skills, like come on, like I've never seen any of these guys sell anything to the public. You know, it's the difference between George Bush going to Iraq and Donald Trump going to Iran. Like, you know, people believe Trump's going to get it done. I think he did Venezuela, by the way, just to give the American people hope. Venezuela might have just been like, watch what I can do. I'm getting you guys positive about what I'm going to do.
Yeah.
And I just hope we don't end up with a bunch of collateral damage and stains of a bunch of Bitcoin destruction. I don't know how many guys. I think there was a couple of hundred Bitcoin treasury companies, or is there more than that?
I mean, there's over, there's
Grant.
over 100,
Yeah.
right? So
Yeah.
But strategy was the only show in town for 5 years. That obviously changed exponentially in 2025. So he had the good fortune of being early, being first, being able to try things, and then take the entire market.
Yeah, I just know, Mike. I was in New York in July pitching Wall Street. I pitched 8 banks. They were like, let's go. I said, okay, what are the fees, dude? 7% on the pipe, 7% on the ATM. I'm like, guys, I will never, ever pay you 7% to do anything for me. Oh, well, AGP, this group did, this group did, and this group did. This is Cantor, AGP, Bank of America, Wells Fargo, all of them tell me. So-and-so did. Clear Street did this. Guys, I will never, ever pay you 7% to do shit for me. And they're like, everybody else is. Grant, you're going to raise $2 billion. What's, you know, I'm like, yeah, you know what? It's no value to the investor. It dilutes the real estate. It dilutes the value of the Bitcoin. It dilutes everything. Why would I do that? Where are you going to get your money from? I'm going to go to my retail investor and get it. Maybe I don't raise $2 billion tonight. Maybe I raise it slower. But there's no world. I think, what's his name? David had just been over there and got, Pomp had gotten 750 million. David got 750 or something. And they didn't give a shit about the fees because this is the first time they saw that kind of money.
So Grant, I'll give you an idea. So what you could do is you could do what Google did. Google did a Dutch auction. And so with the Dutch auction, when they put it out there, they let the buyers come in and they said, oh, the shares, they said how much the shares are going to be. The buyers submitted their bids and the bids came in all these different amounts and you're making your bid and you put in. Now, if everybody puts in for the, you know, if somebody puts in for a higher amount, they get priority to get those shares. So they did it like an auction. So, you know, so what happened with that? That was really good for Google because Google got to retain more of the IPO and they did it. What it didn't do was for the investment bank, for them to get a lot of fees and for
that's right.
Shoulder.
Well, they got their fees. They got their fees. They just didn't get that 15% because what they do is not only did David and those guys pay 7 points, then they took it. It's like being at a Diddy party, right? Like, then it's like, take that, because they tell you, oh, it's going to come out at $14. And then 3 days before it's $11. And then, 3 hours before, dude, it's down to 7 or 8 and they're selling it to all their buddies. And the next thing you know, it rocks back to 14 and their buddies all kept $6. Right. And back in that time, those guys were just lining up saying, please, no lube required. Just do it. I want my money. And not only are they going to have to make up the losses, they're going to have to make up all those fees, all the wasted legal, like there's so much financial damage done from reckless, cheap moments. And I just hope that doesn't, there's going to be some damage, some cost. I don't know how, like David, I don't know how David and Naka actually unwind their thing. Because what's the business plan going forward? See, at least Saylor continues to have a business plan.
Well, David owns Bitcoin Magazine, right? So he's kind of like a media company like you, Grant. Just not as big.
But there's a big difference between when your trajectory is going like this versus like this, and your stock is under $1. I mean, those are two different scenarios. And I think that the people are not going to have a much harder situation to take care of. And I've said about this publicly. I spoke with David publicly on a space and validated what I was talking about with share counts. And a lot of times they didn't think these things through. And because their investment bankers didn't think it through, because they're balance sheet driven companies, they're not income statement based. If you're a pure play Bitcoin company, or if your income is this big and your Bitcoin is like a massive stack.
They weren't looking at anything back then. They were looking at Bitcoin's going up. We're going to get our fees. Look, those people will sell anything. If they can collect their 7 points, they'll stamp anything. And they got 10 meetings after you, by the way. And it doesn't matter really what the product was. And everybody back then was banking Bitcoin can only go one way.
Yeah, and now we're in a different spot. So I think where Staler pitched, switched over to the fixed income market from last year with the prefs. I think that was a major shift. I think he's going to, like Grant, what you were saying, he's going to attract a different market, people that want to get paid monthly. They're like, oh, and the par value stays the same. People can just, it's just easy to think about it. I'll get paid monthly. I could go, if I hold on to it, it's return of capital. Grant, do you do any deals that are return of capital?
Yeah, we do all our deals to return of capital.
Okay. And
the return of capital originally came from real estate.
Correct.
You put in $1 million, you get back your first $1 million. Your dividends all count toward the first $1 million. The passive income's treated differently on the return of capital.
Kind of love
now the problem is, the beautiful thing about the real estate, it comes with a write-off. So not only like on that big project we did last year, it was $250 million. It came with it came with about $100 million of tax write-offs. And we use that to buy the Bitcoin.
I get that. So I have a question on that deal.
Yeah.
Why did because you said you bought the property in bankruptcy, or I don't know, whatever it was.
Yeah.
Why did you get such a good discount? What mistake did they make that in hindsight is obvious?
He took two things. He took 17 years. He found the location, built it, but it took 17 years to do it. And then he scrapped it with too much debt tied to two other deals that he loved next door, a hotel and a condo project. They were all cross-funded.
Got it.
And so what I went in is in all different lien holders. So Blackstone had the apartments, a Canadian group had the hotel, and a third group had the condo project. I took the apartments from Blackstone. Blackstone wanted to buy it. Blackstone was first in line to take it back over if nobody showed up. But in the state of Florida, the lender can't just grab the property. He's got to give it to the marketplace to buy it. So I went in. Blackstone, I wasn't part of the Blackstone plan. So they didn't want me to get it. They wanted it. And so
did you have to beat any other bidders?
Well, what I did was I put a stalking horse in place, which a stalking horse is basically I set the parameters for how the negotiations would have to come down. The courts accepted it. So everybody had to match me and add $2 million and give me a breakup fee of $2 million. So the terms were, hey, I'm putting $20 million down. I put that in an escrow with the bank and said, here's $20 million. My offer's $228. I'll close in 10 days after you give me approval with cash. No due diligence, no check underneath the pillows. I'm in. I can't, no reason to back out. There's no back door. So I did that because I knew that the guys that are richer than me, Michael Dell wanted it, Starwood wanted it, the big group out of all these guys, 14 different guys came in. But Blackstone wanted it but couldn't bid on it. Okay. They were not willing to do the 10-day close because they have boards and they got to get approvals. And I didn't. So they had the money. They had the 20 million. They had the 228. They had everything I had, except that they needed approvals. They're publicly traded, right? So
Yeah,
so
but a
nobody
guy,
can-
right. Sorry to interrupt, but a guy like Michael Dell is personally rich enough just to buy it on his own.
well, Michael Dell actually. Oh yeah, 100%. Okay, Michael doesn't want the apartments. He wants the hotel next to me. He really wants the golf courses connected to the hotel. Anyway, it's a little more complicated. Mike could have done it. Mike could have done it, but he didn't. Because look, guess what? No matter who you are, how much money you have, at some point you're like, dude, I don't have 10 days to put this on my plate because I have so many. They're looking at so many other projects. The 10 days shakes a lot of big money out. Because big money's not being used to being rushed. Mike, you got 10 days to make a decision. Mike's like, fuck you. I do what I want when I want. This is nothing. It's an apartment complex. This is $250 million. Big deal. Like it's a nothing burger, right? So anyway, that's how we got it. The project, each unit's worth $1.2 million if I just spend about 20 grand a unit, which would be about $7 million. And that would make that project 322, 550 or something. We pick up 200 million as a condo project. These are $1 million condos in Boca. They would sell like hotcakes, regardless of the interest rate. So the way the Bitcoin hybrid works, you have to have. There's got to be upside to pad it with the Bitcoin. Otherwise, it doesn't make sense. And you still need to be cash flow positive. Otherwise, you kind of start losing pieces and parts of your story. So
Yeah,
the thing that David's got with Naka, okay, he's going to add an event business that does Bitcoin shows. What if nobody wants to go to a Bitcoin show? Okay, fucking Vegas is off like 12% right now. I can go down to Steve Wynn last night at 8:00 at night in Wynn's Hotel. This brings the best players in the world. It's a $100 table at blackjack at 8:00 at night. That's not a good sign. Now the construction conference is here and the real estate conference is here, but they're pulling from a massive group of professionals, not a bunch of Bitcoiners that are hobnobbing. Like how many people were at that Bitcoin conference you were at, Graham?
At the strategy, well,
Yeah. Oh, is that strategies conference?
so is that strategy conference. So in the
Yeah. How many? How many were? Yeah.
Well, so there was two tracks. The second day was the Bitcoin conference. I would say that there was about 300 people there, but in the strategy world event, the corporate users, that was bigger, probably about 500.
Yeah, there was 100,000 people here for a construction conference and 75,000 people here for a real estate conference. They'll do that every year, by the way.
Yeah.
Like you're just not going to have 100,000 people show up for a Bitcoin conference every quarter. That's not a business.
I want to hear what you guys think about this comment here, but I'm going to let Jesse go first. Jesse, you've said that there are other better alternatives in treasury companies other than strategy, right? So
Put me on the spot.
what would those be before you go? Would it be Strive?
So I think if you're looking for, I won't kind of name specific ones. I think everyone has to make their own investment choices and be aware of their own position sizes. I would say that there's certain features that might make other players more attractive. Some of it might be if you're in the US trying to compete, it's going to be hard. There's MicroStrategy that takes up all the bandwidth for anyone looking at these types of investments. So if you have a geographic moat, I think it's more attractive. I think the big thing is, as I mentioned before, this concept of an all-in cost to run the business. There's a number of these businesses that have negative earnings and they're just bleeding slowly as Bitcoin goes sideways and down. And as they sell things like preferred stock at discounts to par, and as Grant mentioned, when they do these IPOs, the fees are just enormous and it's hard to overcome those sorts of things. It's just, and I think we're seeing the price action because of that. So I would say companies that have some ability to weather the downturn where you're not kind of suffering huge negative earnings and they're small enough where they still have huge upside in terms of Bitcoin yield. If you're small enough, you can grow the Bitcoin a lot easier. It's just a question of scale that comes into play, and that's where I'd look. But then again, I don't know if I think a lot of it, as Green said, depends. It's timing's important, price is important. Guys, I got to jump off here.
Thanks so much, Jesse.
It was really great talking to everyone, and thank you so much for letting me join the call.
Come on again. Yeah, thanks so much. Green, I need you to answer this question.
Sure. What's the question?
This is
Treasuries are like altcoins you can make money on, but it's a gamble.
Yes.
I don't know how I just lost your audio again.
Can you hear me
I
now?
think that the Bitcoin treasury companies ended up being, some of them or most of them ended up being like the altcoins of last year. And I think that's obvious. And, going forward, there's going to be some winners that do well and the other ones won't. I wrote a book about it, and, capital structure is incredibly important. What Grant told us about his deal in Boca, that's a masterclass in buying low and then having a great structure for the property. And a lot of those companies didn't think those things through. It's that simple.
Yeah.
It's
I'm
very
gonna
similar.
come back to keep on losing the audio.
It's very similar to anything, what those guys did. It's just, they bought the hype. Look, it's nothing wrong with buying hype either, but you got to bring some secondary hype. And it's easy to be a hype man. And I'm not saying that in a bad way. I think hype is very important. People being motivated, investors being motivated, optimism. And Saylor does that as good as anybody in the world's ever done it. Trump does it. These other guys, Eric Trump does it. Amazing at ABTC. Amazing. Okay. All while Bitcoin's going down, they're talking about what they're mining, what they're doing, what they're accumulating. They moved up on the list. You got to promote. And some of the promotion we've seen from some of these groups is like, yeah, that ain't a good promotion, dude. So you got to keep selling the story. It's the reason car companies have to come out with new models every 3 years. And iPhone has to come out with something every 18 months.
Yeah, go ahead.
I think one challenge to that, at least for Bitcoin treasury companies, is that your company isn't just your own product. You're also tied to the price of Bitcoin. And I think one of the things we saw in the fall was, with the exception of strategy, I think it really did not matter what these companies came out and said or did. When Bitcoin is falling, you can't raise capital for these companies. You just can't. And I was sitting in the hot seat at a Bitcoin treasury company at the time, and demand just evaporates when the Bitcoin price goes down. And I think if you're going to play in this place, you got to realize you're playing, in a 200, 300 vol space. People buying things thinking like, oh yeah, it's going to go up 5x every month, and then it didn't go up 5x this month. Why is the stock broken? Well, it's not broken. You just have unrealistic expectations. And so I think really the thing to look out for is, what happens when Bitcoin comes back? Will all the companies that bought Bitcoin and put on their balance sheet come back? No, I don't think so. I think that, particularly the two major constraints, Jesse talked about, the geographical moat. But I think it's more than just that. If you're going to run the strategy with ATMs, and especially if you're going to do preferred shares with ATMs, you have to have a lot of liquidity. And you kind of have to own your own market's liquidity, in my opinion. And so that's why I think it's difficult. If you're going to start a new company, even in the United States, you have to compete with strategies liquidity. You've got to convince someone else to buy that stock. You've got to be not just the preferred stock to hold. You've got to be the preferred stock to trade. I kind of got involved by doing Bitcoin treasuries in other countries, and I think a lot of those won't make it just because the countries' stock markets don't have enough liquidity in them. They don't have enough trading volume for this strategy to really be successful, especially if you layer on a preferred share on top of that that's going to have far lower liquidity than the main common stock. So I think those are some of the challenges. One, Bitcoin has to come back. Bitcoin treasury company is going to have great stock value unless Bitcoin comes back. I think even when looking at strategy, people say, well, why didn't it hold up better? Well, I think the counterfactual there is, what would have happened if they hadn't bought all the Bitcoin that they did? It'd probably be even lower now than it is if they hadn't bought all that Bitcoin in the past 12 months. and people are pegging to this, high in November 2024, this blow off top high, and saying, why did they're benchmarking off that and saying, why isn't that the new normal? Well, why would it be? why would this huge blow off top be the new normal? Which is, it's all kind of a long-winded way of saying that I think these things are very cyclical. And if you're looking at, will they come back? Well, first Bitcoin has to come back. They've got to have the right market structure wherever they're located. They've got to have a semi-monopoly on their market. And
Brian, where do you think it needs to come back to? And for how long?
I don't think it's any specific level. I just think we need to be back into something that generally feels like a bull market. And we're not there now. If the typical bear Bitcoin cycle plays out, we're probably looking at a slow grind into a low in October, and then maybe once the Fed starts turning some liquidity on, starts expanding the balance sheet again, and that's when some of the excitement comes back. And I think, and probably the same thing will play out again. If you look in the 2021 run, strategy had its peak way before Bitcoin peaked. Same thing happened this time, peaked in 2024, almost a year before Bitcoin peaked. I kind of expect these things to just play out the same. The excitement comes back, there's a big run up, a bunch of new people come in, you get a blow off top, and then people say, well, why didn't it stick there? And then it grinds down and just repeat the whole thing all over again.
Brian, what do you think about Metaplanet?
They are the Bitcoin treasury, aside from strategy, that I'm most optimistic about, because they have the most favorable interest rate environment in the world to operate in. The Japanese yen carry trade exists for a reason. They have structurally lower rates. They've got an effective monopoly on their market. Strategy tried to enter, couldn't. I think probably never will be able to, because one of the things you need to list in the Japanese market is to demonstrate that you could plausibly pay dividends from operating income, which strategies, return of capital dividends will never do. And Metaplanet is working on that with their Bitcoin income generation business, which is basically derivatives trading arm, where they're selling puts, and maybe they've started selling calls now too. But there's a lot of specificity to the Japanese market that I think will allow Metaplanet to completely own it. And as long as the officials who have the powers that be at the Tokyo Stock Exchange play ball and let them list their preferred shares, I think they've got just a fantastic market to operate in.
Okay, so thank you, Brian. Very interesting. I'm going to wrap this up. Do you guys think that we are at MSTR amplified returns or losses by next year? Great.
I think MSTR will be significantly higher a year from now. I truly do. And that's the way I look at it, based upon the metrics that I see. Now, we need Bitcoin to be cooperative and go up also. But from that perspective, I really do think the bottom most likely is in. Could it trade sideways or dip? I really don't think it's going to go below 60,000. And, we really need to resolve what's in the Middle East. And then, provided that Saylor sticks to his plan with STRC and the prefs, specifically that, I think we're in really good shape going forward. The other Bitcoin treasuries companies, they have massive challenges. The ones that get the prefs out are in much better shape. And so with that, I'll leave it there.
So I also think higher. I think a lot of people are kind of worried about what if Bitcoin bores me to death over the next 6 months. I would love that. I really would, because if we have this long flat period where implied volatility grinds down to nothing, that sets up kind of the epic, leaps options trade that a lot of people did last cycle, where you can buy into options at very low premiums and ride that through fairly large expansionary period. Definitely, I don't recommend most people trade options, but it's something that I have my eye on is a trade in the future.
Grant, what do you think?
I just wish I was as smart as these two guys. So, and I understand some of this other stuff that people were doing every day that I don't understand, and most real estate guys don't. I think we're higher. I think MSTR is higher. I think Bitcoin surprises this year. like the rooms I go into, they're you know, all you guys know way more about Bitcoin than I do, but they're so negative, it's unbelievable. And
They're negative about what? They're negative on Bitcoin or negative on the.
yeah, pretty much negative. You can see them. They're not doing rooms like they were. They don't know what to talk about. Some guy bragging about he hadn't been on in 7 days and he's adding followers. I'm like, I don't know. Oh, that's who I've been listening to. I've been listening to people worried about followers. I thought these were people who were interested in money and finance. You got to understand the people that are coming into Bitcoin new are listening to these Bitcoin rooms and thinking everybody there knows more. I know I have done this. Oh, these people are freaking geniuses. I forgot to ask them what their bag was. One, because it's taboo here. Supposedly nobody can tell anybody anything. It's a secret topic. But, you know, I just came in to learn. I'm trying to learn, and I'm assuming, you know, that everybody knows more than me. When I went to those meetings at Wall Street last year, a friend of mine that's taken 2 companies public said, just remember this, when you get in those, and we were meeting with the top people in the banks. Just remember when you go in these rooms, Grant, remind yourself at every meeting, they're no smarter than you are. But you know, when you're trying to learn something like I am in these rooms, I have to assume that you're the teacher and that people know more than I do. So just from a simple guys, the people that don't know about Bitcoin are more positive about Bitcoin right now than the people that know about Bitcoin. I'm making a wild generalization, but that's why I think that most people are wrong most of the time. So I think Bitcoin outperforms this year and surprises a lot of people.
I agree.
Yeah, I think you're very smart, Grant. I mean, like anyone who wills things into existence, there's very few people who do that. You have that.
Well, that's not necessarily intelligence.
Oh, it's definitely
It could be stubbornness. It could be, you know, I don't know, some self delusional self-esteem issue, something. Gary would know more about my problems than.
I need some of that. I think that what you're doing with Bitcoin and real estate is amazing. Like that's going to help as well with the whole Bitcoin marketing problem that's going on. So yeah, everyone should check out what you're doing. I'm like super excited about it. Follow Grain of Salt as well and buy his books. Make sure you follow Brian too and know what he's thinking about. So you guys are smart as well. And please come back again. You're always welcome here. Make sure to check out Arch Lending as well. We're really happy to have them as a partner. And
then Dana, you should ask the audience what the next week's debate should be, because they can, you know, and the guests, you know, they'll probably help you with topics, and also with the guests that you could bring on. So you start attracting other audiences.
Yeah, that's a good
idea. You can keep this. You guys can keep this. You could keep this to Bitcoin, but if you do, you're going to limit your audience. That's what I've told Gary for a long time. Gary, you need to open up. You need to open up your audience. Bitcoin's an audience when Bitcoin's smoking, but Iran's an audience this week.
Well, that's
next week, yeah.
That's kind of our problem, right? I mean, like the Bitcoin space is so little. It's like the same.
It's nothing.
So how can we widen our audience, Grant?
Well, you talk about this is what I was telling Saylor. I said, I don't need to sell people on Bitcoin.
Yeah.
He's like, well, what are you going to sell them on? Real estate. They're already sold, bro. They live in it. We're just going to add to Bitcoin. The Bitcoin's this much of our conversation. The conversation starts with the thing they already agree with. So when you guys are doing a debate, you need to pick that debate topic that the public, large numbers of people agree with already. Look at Mario's spaces. All they're dragging is the current content, whatever is in the news today. So, you know, that means you guys got to be a little like, maybe just wait till the day of. But it really is these shows. If you guys want to build a real audience, you gotta go with whatever the people are thinking about that moment.
Yeah, Dana, I'll give you a great idea for debates. You say, look, we're going to have 4 people show up. When you join the show, 2 of you are going to be pro and 2 of you are going to be con. But you don't tell them which group you're going to be in. If you would have came to me and say, I want you to argue against MSTR, but pick the guy that's negative MSTR and he's got to be pro, I'd be okay. But you just have to put this on the bottom and say, I will argue it from the negative perspective, which I already gave you, which is if the Bitcoin per share has tripled, why did the stock drop so much? And so I am willing, when you tell that,
Yeah.
if you do any type of debate, when they show up, you don't tell somebody which side you get to be on, and you tell them they'll be the opposite side.
We have done that before, and you're right. I'm going to stick with that. I stopped because I was like, is this actually, look, as long as we have smart
Is it authentic? Is it authentic? Yeah.
correct. Yeah. What do you
Yeah.
think, Grant?
Yeah, you should just find you should find people that there's always people going to take a position, but again, what you're trying to do is rob audiences, or a better word is collaborate with other audiences.
Mm-hmm.
It's just your topic needs to be more open. Nobody cares about Bitcoin today. They care about, did Israel get freaking bombed today? Did Greece get bombed today? Like that's your competition's not Bitcoin. It's Iran.
Yeah, I didn't think about that.
Yeah,
Okay.
I have to drop. I want to thank you, Grant, Brian.
Yeah, thanks, Dana. Thanks, guys. Brian, great talking to you. Great meeting you, Brian.
Thank you so much,
Thanks for having me on
guys.
the show.
You got to tell me one day, Brian, about the horrors of running a public company.
Yeah, it's very interesting. That's for sure.
Yeah. Thanks, guys.
Thanks. Bye.
Bye, everyone.
Bye.